Hi, good morning, everyone. Welcome to the TradeStation Masterclass. My name is Jesus Nava. I'm the Director of Client Training and Education for TradeStation Securities, and it's always a pleasure for me to be here doing these classes. Let me just get a moment here. And Manolo, if you're in class, I don't have permission to turn on my webcam. So if you can turn it or give me permissions to turn it on, I would appreciate it. Sorry for the late start there. I was just trying to get some files ready. Okay, there we go. uh, Thank you, everyone, for being here. Today, we're going to talk about sort of an advanced topic, which is the walk forward optimizer. It may not be the tool for you because it's for those traders that actually that are diving deep into developing strategies and optimizing parameters, but it's a great piece of software that is available on the TradeStation desktop that allows you to do precisely that: stress test any strategy against historical data so that you can validate some of those parameters and make sure that you have some confidence about them. You know that they're going to perform as you expect them, they're going to perform. Now, we have to go through some of the disclosures in this class, especially because we're going to be taking a look at strategies and performance reports. And we just want to be everyone to be aware that when we look at historical performance, this is no guarantee that you'll get the same results going forward. So, first of all, any symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation, and also that active trading is not suitable for everyone. But in terms of strategy backtesting and what the main topic of today's presentation is going to be, yes, anything that happens in history is no indication that it'll happen going forward. So we have additional disclosures here on the page. So feel free to go to www.tradestation.com/important-information for additional details. Manolo is my colleague, and he's shared that link right there into the chat for everyone to access. Okay, so let's go and transfer over here to my TradeStation platform, and let me get rid of some of these dialogues at the bottom. I just have a couple of things that I want to talk about before we even dive into the walk forward optimizer, because we do have to have an understanding on what optimization gives you. And I'm just talking about simple optimization. So we need to understand simple optimization before we even consider going to the walk forward optimizer. So let me go ahead and share with everyone a couple of things. I'm going to share with you a strategy, and I'm also going to share with you a workspace that we're going to use in today's class just as an example. And Manola's going to share that link right here in the chat. It's a zipped folder, and inside the zipped folder, you're going to find a custom strategy and also a custom workspace. And I provide you with this strategy and workspace that are titled WFO test for testing purposes. It's like a little sandbox for you to play around and tweak settings here and there, because it does provide you the ability to get some information that you can analyze inside of the walk forward optimizer. So let's go ahead and look at a strategy. I'm gonna just do a brief introduction on how to set up basic optimization, and then we'll go into discussing why would you want to use the walk forward optimizer. How does it help you go beyond what is on the basic optimization that TradeStation charting provides you. So let me go ahead and see if I find a graphic here on all right, just a moment. Sometimes I have graphics that I forgot to capture here, but don't. Okay, there we go. It's multiple graphics here that we can use. All right, here we go. basic optimization first. Let me go ahead and remove this strategy. All right, we're going to go to a daily chart. This is a daily chart of Spider. So a basic introduction and optimization. Let me go ahead and start with a simple strategy. I'm going to go here to add strategy. First of all, I'm going to use one of the built-in strategies of TradeStation. Nothing custom, nothing original, just something that is intended as a strategy component. And we're going to use a moving average long entry and short entry. This one right here. Long entry and long exit. Let's keep it simple and just do the long side. Although, let's do the short side too. Why not, right? Let's do both sides of the spectrum, especially if you're doing, historical backtest on time periods where shorting would have been a better option than going long. Then it's sometimes better to build a strategy that covers you in those two different market scenarios. So we have here the two strategies elected. One is the long entry and the other is the short entry. And I'm just going to put them right here on the chart. Okay. As you know, every strategy that you use inside of TradeStation will automatically find every single instance where the strategy would have generated a trade. So whenever the strategy generates a long entry, you'll see it there. Whenever it generates a short entry, you'll see it there as well. Now, this is based on a simple moving average set to a 9-bar period. So let me go ahead and add that study here to my chart so we have something to compare. It gives us a visual on where those crossovers are. So let's go here to indicators, and this is just a simple moving average. Again, I'm using things that are built into the TradeStation platform, and you can do the same. All right, here we go. So this strategy, let me go ahead and zoom in here a little bit. The strategy is designed to give you a long entry whenever the price activity crosses over the average. And when it crosses under the average, it goes short. So here we have a crossover to the top side, and we have a long trade. Then it came back down, we have a short trade. Here we have a crossover to the top side, we have a long trade, and so forth. This will do exactly what the strategy it's designed to do, which is generating a signal as soon as there's a crossover that moving average, and whenever there's a cross under that moving average. And if you look at the whole chart on historically, I can scroll back. This is a chart of Spider, by the way, going back believe I haven't checked. Let me go ahead and double check. Let me go to edit symbol, settings. Okay, so this is a chart that's going back 5 years, 5 years of historical data. And we have the strategy identifying every single time that spiders crossed that 9-bar moving average, okay? Again, this is not about selecting parameters, from the get-go. It's just about utilizing the tools in TradeStation tell us, what parameters would have worked best. If I go to my strategy performance report, you can see that from a summary, this is the performance summary, we see that it's a losing strategy. We lost about $12,000 in a time span of 5 years. The profit factor is 0.83. Now, we didn't tweak the strategy at all. We don't have any protective or risk management strategies. We have no stop losses, no profit targets, nothing. So we just grabbed two strategy components, threw them in the chart, and this is exactly the report that we get. Not quite, what I was expecting. I was expecting something nicer, but it's okay. This is just a strategy test, and it's okay for us to, test ideas and grab things here and there and put them together and see if they work or not. Now, if I do basic optimization, this is the way that it works. I'm going to go to studies and go to edit strategies. Because as I pointed out earlier, this is a strategy that is based on a simple 9-bar moving average. But why 9 bars? This is just a default parameter. What if other parameters would provide me better results? One thing that I can do is customize the parameters of the moving average and optimize them. I'm going to click on that 9. I'm going to click on optimize. And, I'm the type of guy that like round numbers. So for me, 9 seems kind of awkward. I would have just picked 10, just because my mind works better in even numbers. I'm not sure if you're the same way, but a lot of times traders, when they pick out parameters for their studies, sometimes they grab whatever number they feel comfortable with, or maybe they grab a number from the Fibonacci sequence. You know, if it's a 3, if it's an 8, a 21, a 13, whatever odd number you want to test, you know, you can just plug it in here. Now I can set my ranges here and test different values. And I can say, well, give me from 10 all the way to 50. And I'm going to test this in increments of 1. Now I can start at 9 if I want to. From 9 all the way to 50 in increments of 1. So it's going to test 9 periods, 10, 11, 12, 13, 14, and so on. You know, if you want to change the increment, that's a good idea too. So it doesn't have to test every single iteration of the parameter. You know, sometimes if you want to grab more whole numbers, like let's say, for example, you want to test from 10 to 50 in increments of 10, so that it only tests a 10-bar moving average, a 20-bar moving average, and a 30-bar moving average. So you're going to have to determine, you know, what the stepping is going to be by providing an increment in here. Let's leave it at 1 just because we can. Let me go here into the short entry and do the same thing. Grab the 9, optimize it, and I'm going to go 9 to 30 in increments of 1. Did I say 30 last time? I said 50. Okay, so that's going to create a set of tests. And if you look over here, the total number of tests is 1,764. So it grabbed all the parameters that are in between 9 and 50, created all the different, you know, combinations that is capable of doing, and that's going to give you a total of tests. Now, this is a basic optimization. If I click on optimize right now, let me go ahead and go here first. Okay, so my optimization is already set to reserve, and I think we talked about this last time we did an optimization class. My optimization setting is set to reserve 30% of the last data for what's called out of sample. I'm going to set these to 0 for now. Okay, and then we'll go through different steps of how do we get to the walk forward optimizer. I'm going to click OK. And because I don't want to reserve anything for out of sample. If you need a little bit more explanation of what that means, is that we're using the whole amount of data. We're using the whole 5 years to optimize my parameters. So let's go ahead and do the full test count of 1,764 tests. I'm going to click on optimize. This is going to calculate how long it's going to take. It's going to be pretty fast, and it did that automatically. Now, if I go to my strategy performance report, I can see that the report turned positive. And if I go to, let me close this out. If I go to the optimization report, I can see all the different scenarios that were tested. Now, let me go ahead and make the font here a little bit bigger because I know this is rather small. Let me just make the font an 11 and bold. All right. I'm not sure why there's no default here, but you can see that my results are going to be sorted by net profit. So let me sort by net profit, and you can see that the one that generates the most are right here at the very top. And you can see for the long entry, it picked a parameter of 10. But for the short entry, it picked a parameter of 36. So you can see the difference between the two. You know, in an uptrending market, of course, you know, we don't want the short entry to be so sensitive to dips in the market. And this is the reason why we have a higher parameter on the short entry. For the past few years, you know, we've seen an uptrending market, of course, with some corrections, but that's the reason why you see this difference, or this marked difference between a long entry parameter and a short entry parameter. But it's interesting that we're able to use optimization to determine, okay, which parameter works. But it seems like the parameter of 9, which is the default parameter for the moving average, did not work really well for the short entry side because it was a little bit too sensitive. And every simple correction, you know, the short side would have triggered a short entry in an uptrending market, which is counterproductive. So it seems like the strategy was able to realize that when it sees historical data, and any one of us could have realized that, you know, that's a whole problem. And I call it a problem because you may think that this will help you, or this will help you find the holy grail, when it's not in reality. Because as a trader, if you look at historical data, it's very easy to pick out the best entry and exit points because you're looking at the data. And that's exactly what optimization is doing, is just looking at historical data, figuring out where you could have entered and exited optimally, and then selecting those as your parameters. That's how likely is that to happen exactly the same going forward? Very unlikely. So in a setting like this, what we do is like we reserve a portion of the historical data and call it out of sample, meaning that we're going to take the strategy, look at the historical data that we're going to call in sample, optimize our parameters, select those parameters, and then apply them to the unseen data, what we call out of sample. This will give you a more realistic representation of the strategy, because now the strategy is being applied to data that it hasn't seen. That's like applying a strategy from this point on forward, like we call it forward testing, right? But we can kind of simulate that by breaking up our historical data into pieces. In this case, two main pieces. We have the in sample, where all the optimization calculations are happening. And then once it finds those optimal parameters, we'll take them and apply them to the in sample, which the strategy has not seen. So when I come over here, let me go back there to my studies, edit strategies, and I'm going to, optimize the parameters one more time. Let me click on optimize here. All right, and I'll go here and I click on customize and I say optimize. All right, I'm using the same parameters so you get an idea of what this does. Here, we're not going to change any settings except going to advanced settings and setting a percentage. I'm going to say reserve a 30% of the 5 years. So we're talking about a year and a half worth of data towards the end of the historical backtest that the strategy is going to ignore. It's only going to focus on the 70%, which is the in sample. And you're going to create two reports. You're going to have a performance report on the in sample and a performance report in the in sample. So let's go ahead and take a look. I'm going to click OK and then click on optimize. All right, so the strategy comes back. Let me see if the strategy settings are the same. So let's go here to the optimization report. Let me sort by net profit. And you can see that it changed a little bit, not much. For the short entry, we still have the 10, but look at for the long entry, we still have the 10. For the short entry, we dropped it a little to 28. Why? Now, is this based on all data, in sample, out of sample? Let's go ahead and take a look. Let me go and bring up the strategy performance report, data, strategy performance report, and there's going to be a little drop down up here that says all data. This is the performance report combining my in sample with the out of sample. Take a look at my profit factor for the in sample was 2.03. Profit factor means that for every dollar that you lose, you make 2, which is pretty good. If I were able to get this result going forward, I would be happy. Look at the long trades has a higher profit factor than my short trades, which is expected, in an uptrending market. But what I wanted to highlight here is that I can go up here and say, show me the performance of in sample. Now in sample, now we don't really look at the total net profit, because it's clear that if you're looking at in sample, you're talking about a 70% chunk of historical data. So that data is, of course, going to have more trades than the chunk of 30%. So when it comes to net profit, you may have always varying numbers, compared because of the amount of data that you're analyzing. But if you look at the profit factor, maybe it's a good measure to see, okay, what was my profit factor in the in sample versus the out of sample? You can see that the in sample, my profit factor is higher. I was making $2.65 for every dollar that I gained, which is much better than what I saw before. But what we were seeing before was a combination of the in sample and the out of sample. Now, if we go over here and we switch this to the out of sample, then notice that we get a 1.08. For every dollar we lose, we make $1.08. That's tough, right? It's a break-even strategy, kind of, and this is not even considering commissions or slippage or anything that could happen to the market that could throw your numbers a little bit off. And I don't like what I see. And notice that what I'm concentrating on, I'm concentrating on the out of sample. Why? Because yeah, the in sample, we talked about it already. We said that the strategy is curve fitting its results based on historical data that has happened. But now when the strategy took those parameters that it found in the in sample and applied them to the out of sample, now we're getting results that are kind of more realistic in the sense that it applied those parameters to data that it didn't see. And these are the results. This is like applying it going forward, and we didn't quite get the results that we were expecting. So to this, if I were to look at a strategy and I were able to see this, I would say the strategy broke down as soon as we applied it to strategy. I mean, as soon as we applied it to data that it didn't see, it just broke down. It didn't perform as well as it did in the in sample. The in sample had a 2.65 profit factor that was impressive, but it didn't hold true once you applied it to the in sample. So Adam has a question here. Is it possible to set a 2-year in sample period and a 6-month out of sample and walk this forward through the data? So multiple OSS periods being assessed for sure. And that's exactly what the walk forward optimizer does, Adam. And I did this, initial introduction so that we can set the tone of what the walk forward optimizer is for. Because yes, exactly. You can do exactly what you just mentioned in your question, which is walking forward these percentages of in sample and out of sample. Let me show you how to set that up, because that was what I meant to show everyone here. Now, as an example, well, let me go here first and show you here with this example how to set it up. I'm going to go here to customize, optimize this, then come over here, optimize this other one. All right, we have a total test count of 1,764. If you want to do a walk forward analysis, we have to switch the type to walk forward. The one that we just ran was just standard, but now you can go to walk forward and provide this a name. I'm going to call this SPY MOV AVG one line. Okay, so that I know what it is, what is it testing, the symbol. I believe the interval, it's automatically saves into the file name. We'll take a look. But as soon as you set this to walk forward, and you said the name to save the file, that's the file that we're going to be able to open inside of the walk forward optimizer. So let's keep that in mind, because this will look very similar to what we did previously. It'll run the 1,764, but it will not launch the walk forward optimizer. And we'll talk about what the walk forward optimizer does in just a little moment. So let me go ahead and optimize this. Okay, this will run. Perfect. It ran. And if I go here to the strategy performance report, I'm sorry, not the optimization report, data. I just want to show you that it's exactly the same one that we ran previously. But if we go to the strategy performance report and we go to all data, nothing changed. This we just switched it to walk forward, and it actually saved a separate file for us to use in the walk forward optimizer. That's one step you cannot miss if you want to use the walk forward optimizer. Now, before we go to the walk forward optimizer, I wanted to bring up a screen so that we can take a look at some a screenshot. I'm not sure if this is clear enough, but this is the TradeStation Help files on Monte Carlo analysis. I'm not sure if this screenshot, it's kind of clear, but I'm not sure if we have it somewhere else. Let me just see something. Okay, let me just go here to help, because I think, if I go to, let me bring up the walk forward optimizer for just a moment. Apps, walk forward optimizer is a separate application. I'm just going to pull it up and go into the help. I'm going to show you how to load the results in here, but let's go to contents and index, because yeah, WFO has its own help files. Let's go here to getting started. No, This just tells you what it does. Cluster analysis. No, this just gives you, by the way, this gives you a ton of information about, you know, the walk forward optimizer. So anybody that's interested in really diving deep into the functionality of the WFO, do not underestimate, the help files, because every single answer and every single question is going to be explained in here. Okay, let me go ahead and close this out and bring up. Let me see if I find it inside my pictures. I should have, just want to make sure that I have a clear picture of what I'm trying to describe. Let's see. Okay, I think I found it. Okay, this is not made by TradeStation, but it gives you a more clear picture of what you guys, or what this means. Okay, so are you able to see the screenshot that I just uploaded here? I'm not sure if I'm sharing the right thing, but it's called rolling walk forward analysis. Thank you, Rich. Thank you for that. So imagine that this whole year, and notice that it's labeled by month up here. This whole year is what we're using for our historical backtest. Now, every row that you see here, it's considered a run inside of the walk forward optimizer. So if we count, we have 1, 2, 3, 4, 5, 6, 7, and 8 different runs. And it's called runs because every time that it runs, it's going to grab a different portion of the historical data. In run number 1, it's going to take months 1 through 4 as the in sample, and it's going to grab month 5 as the out of sample, and in a walk forward analysis, it's going to continue to push forward those percentages until the totality of the data is being utilized. But notice how the out of sample is being stacked up against each other. So the only percentage that shifts completely is the out of sample percentage. There's a little bit of overlap right here in the in sample, but not in the out of sample. So we always have month 5, month 6, 7, and so forth of out of sample data. When you run a walk forward optimizer, what you want to do is you want to concentrate on the result of the out of sample. And what the walk forward optimizer does, it takes all those results, compiles them together, and gives you what the strategy would do in unseen data, which is what matters the most to you. What we talked about just a moment ago, we did an optimization on a moving average strategy. We looked at the in sample result, which is impressive, but then we looked at the out of sample and it kind of broke down on us. That's exactly the results that we are interested in as a strategy developer. We want to know what the strategy does and how it behaves in data that it hasn't seen. So this type of result, or this type of analysis, it works great in terms of testing the strategy and making sure that it's doing well on data that it hasn't seen. Okay, so hopefully it's clear, and we're going to go over here to the walk forward optimizer to load the optimization we just did. So let's go over here to my TradeStation. I'm going to pull up the walk forward optimizer. Let me get rid of this. All right, and we already did the optimization. Remember, we selected from standard, we switched it to walk forward, and now we go over here to the file menu and we click on open walk forward test. And I'm going to go to the drop down. I have a few tests that I've done here in the past. This morning I sat down, I started cleaning because my list was going and ongoing. Because strategies is something that is fascinating. And if you are developing strategies, there's a lot of fun into developing a strategy and finding out if it's providing you good results or not, So let's go ahead here. If you guys remember, it was a spider daily chart, and we called it SPY moving average one line. I think this is the name that we selected. All right, so I'm just going to click it, and I'm just going to click on open. So in the background, the optimization results are loaded onto my walk forward analysis. There's two things you can do here. And when you go to the walk forward analysis, you can do a single walk forward analysis, or you can do a cluster analysis, which is multiple walk forward analysis, WFAs. So not to confuse you, if you do a single walk forward analysis, there won't be variation between, the percentages of the in sample and the out of sample. Let me do if you go to single walk forward analysis, did this start already? Yeah, it's running right here at the bottom. So let's see. This is at 45%. Whenever you start, I wasn't expecting it to run automatically, but I just selected the single WFA so you have an idea of what this does. Okay, so, okay, there we go. It just finished. And you can see that. Let me see what it did, because I'm going to go here to setup just to have an idea. And I'm going to go here to optimization settings. For the single, here's where it is. For the single walk forward analysis, the out of sample is 20%. And what it does, it runs 10 times. That's all that it does. It grabs 20% of out of sample data and pushes it forward. Well, the walk forward runs is important too, because we're talking about 5 years of historical data on spiders that we're testing, which means that those 5 years are going to be broken down into 10 individual runs. Remember that we talked about this screen right here, right? And we said that every row is a run, and every one of those runs has an out of sample section, which is based on a percentage. And that's exactly what's happening here. We have 10 runs where every run has an out of sample percentage of 20. But this is just a single walk forward analysis. What you see here in the screenshot is exactly a single walk forward analysis. Now, when you do a cluster, now down here it's a cluster analysis, which is really, taking it to the next level, is when you not only vary the number of runs, but you also vary the percentage that's being used for the out of sample. So over here, notice how it has a range for the runs. It goes from 5 all the way to 30. So that means breaking up those 5 years into 30 small segments and in increments of 5. And you also have the variability in percentages. Now I can have my in sample to be, the out of sample to be a 10%, all the way to a 30% in increments of 5. So you have all this variability between what you're going to be using for number of runs and what you're going to be using for a percentage of the out of sample data. So hopefully I haven't lost everyone here and you're still following me, but a cluster analysis, if you are developing a strategy, is the route to go, because it'll stress test your strategy in so many different variations that you can build the confidence that's needed in order to, stick with a strategy and trade it through. Okay, so I wanted to come in here into the setup of optimization settings so that you see the difference between a single walk forward and a cluster analysis. So I'm going to come over here to the walk forward analysis, and you can also start a cluster analysis. But let me just see here. Let me not spend time, explaining this, because I want to make sure that we get to what matters the most here. So I'm going to go to walk forward and go to start cluster analysis, because this will give me a table. This table is really cool because it gives you a graphical representation of what the strategy is doing, historically and in testing. Now you can see that we already have a failed result here, but this is going to fill up the table. We have a progress bar down here, so it's going to take a while for this to complete, because it has to not only vary the number of runs, but it also varies the number or the percentage of out of sample. You see those numbers up here. This is a table. Right now, we're using a 10% out of sample. OOS stands for out of sample percentage. So right now, we're just using 10%, but now we're breaking up the data into 5 runs. Now we're doing 10 runs, and now we're doing 15 runs. So we'll do 15, 20, 25, and 30. And so far, we're just getting failed results. This is, the result that I would expect with a lot of strategy components that are available in the TradeStation platform, because they're not built as a full strategy. As I said at the very beginning of the presentation, the strategy doesn't have any risk management. It doesn't have any technical exits. It doesn't have a combination of entries on the long side and the short side. So it's missing a lot of things. And I would expect, it to fail across the board here. Now, before I jump over to the samples that I provided you, let me go ahead and abort this. There's a little exclamation mark here that allows me to abort this. All right, okay, I just clicked on it. Notice that it creates a cluster of results for you as a color-coded result. Right now, since we are aborted the optimization early, then it just fails everything on the board, But I wanted to show you here in setup and look at the test criteria, because the test criteria is what's being used here to determine if something passes or fails. And as a strategy developer, you have full control over everything that you set here. For example, it uses 5 criteria by default. The first one is profitability. It fails if the total profit is less than 0. Of course, you have the box here to edit it. Criteria 2, the walk forward robustness. This is a cool measure here. Fail if walk forward efficiency is less than 50%. That's when we compare the in sample with the out of sample. If your out of sample is not doing as well as the out of sample, then we got some trouble. Here, the setting, it's a little bit more relaxed because we want the walk forward efficiency to be at least 50% as good as the out of sample, the in sample. Like the example we talked about earlier on the moving average, we had, I'm not sure if you guys remember the numbers, but the profit factor on my in sample was like 2.65. And then we switched over to the in sample and it was just 1, barely breaking even. So that's not even, a quarter as good as it did, in the in sample. So in order for the test to pass, we need to make sure that the out of sample, the unseen data, is at least 50% as good as the in sample data. Consistency of profits fail if less than 50% of walk forward runs were profitable. Again, we are talking about the way that the historical data is broken into, the runs. If you have 10 runs, it's going to expect at least 5 of them to be profitable. And then you have distribution of profits. Fail if any single run contributed more than 50% of the total net profit. So we don't want any outliers, If after combining all the runs, you still have a profitable result, but that's just because of one run, then that's not really consistent results. And then the last one is fail if maximum drawdown in any single run exceeded 40% of initial capital right here. Initial capital is what's selected. Initial capital, by the way, it's up here. It's not the initial capital in your account, it's the initial capital you supply for strategy backtesting. Now, for the strategy to give you a passing grade on any of these boxes, it has to pass all the different 5 criteria. If it fails any one of them, it'll fail the whole group. Okay, so that's the way that it's set up. And of course, you can change it and modify it. Let me close this for a moment. In the zip folder that I provided everyone, and I don't know if you can share the zip folder again here. That way everybody has access to it. I have a workspace. Let me go ahead and open it here. Let me go File. Before you, and one of the things that I want you guys to know is that before you open up the workspace, you have to import the ELD. Otherwise, you'll get an error. I already have my ELD imported, so I'm just going to go to workspace. Let me go ahead and open this one. All right, this is a strategy that opens up when you pull up that zip folder. And the strategy right here it's a strategy based on the Keltner channel. So whenever it breaks the upper band on the Keltner channel, it'll go long, and when it breaks the bottom band of the Keltner channel, it'll go short. That's how the strategy is designed. And it also has some trailing stops and some ATR stops built into the strategy. So if you want to open up the code, you're welcome to. If you right click on the strategy and you go to edit easy language for WFO test, the code is open to everyone, but you can see that it uses number of ATRs. So this is just the straight calculation of the Keltner channel. Then we have the number of ATRs that are being used for the short and the long side. Here's the trailing percent for the long side and the short side. So whenever you see an L and an S at the very front of the number, it's just separating longs and shorts so that you can, optimize those trades separately. So feel free to look at the code, see the alert conditions and how the strategy is set up. But it's just to have a point of reference. This is just very similar to the Keltner strategy that is built into the TradeStation platform with some additional, exits. Let me go back here to TradeStation, and I'm going to optimize. Has a whole bunch of parameters to optimize. The length for the long entry. I'm going to use the default settings here because they've been already set so that I don't get, crazy numbers. But this is from 8 to 13 in increments of 5. This is testing the number of Keltner channels, 1, 2, 3. On the short side, again, we have 8 to 13 in increments of 5. This is an interesting because it starts at 8, stops at 13, increments of 5. So it's going to test 8, and then go to 13, and that's it. It only tests 2 values, 8 and 13, because the increment is set to 5. So that reduces the number of tests that you have in an optimization. Remember that the longer the ranges of parameters you create, the more tests you're going to have, and exponentially more tests you're going to have. I was doing some testing this morning, and I got to a point that I was doing 8 billion tests. I didn't run it because I knew that I was just going to sit here for days waiting for my computer to come back with results. And that's why when I set up the range of results here, which are built into or saved to the workspace, they're very, very small, 1, 2, 3 in increments of 1. So here we have 13, again, 13 to 21, increments of 8. That only tests 13 and 21, that's it. All right, so here 2 to 4, increments of 1. I'm just gonna go down the list and optimize every single item that is here. All right, when I click OK, and notice that this is not a class where we talk about exhaustive and genetic. Maybe we do another class about the difference between exhaustive and genetic. But when you have a test or an optimization that has this many tests, this is 291,600 tests. Instead of doing exhaustive, we sometimes switch to genetic. Genetic is more of a sample. Just go, in the whole population of parameters that I have, and test here, then test a little over there, then test a little bit over here. Find where the sweet spots of the population is and where you can find, optimal parameters. And then you start mutating your populations in order to find the fittest. That's what generic optimization does. Genetic is not something that TradeStation invented. If you search for genetic optimization on the web, you're going to find a ton of information on how the calculations are performed. But I can do a genetic optimization so that it brings the number of tests from the 291,000 that I had to approximately 10,000, which is a little bit more doable, at least, in a class that I'm, ending, that I need to end in 5 minutes. I can click on advanced settings and see a little bit of the settings that are being used right here on genetic optimization. If this is your thing, I know that back in the days, I did a lot of research on genetic optimization, and I studied it a lot because I wanted to know how each one of these factors played a role in running the optimization. And it's very, very interesting. You have a suggest button that allows you to suggest parameters here if you're not really familiar with how to set these up. And then I'm going to click OK. I notice that now it's going to run a tests of on 58,000. So this will take a while. Let me see if I can optimize this. Before I optimize, though, remember that we need to switch this to a walk forward. Otherwise, you won't be able to link it to the walk forward optimizer. So if I use a name here, let me go ahead and do WFO Masterclass. Okay, so let me go ahead and optimize. I'm not sure how long this will take. This is genetic optimization. Let's see, it's running over here. Oh, this will take a little bit longer than what I expected. Is because of the 58,000. Notice that the estimated time to completion is about in 1 hour and 31 minutes, which is not what I was expecting. Maybe because of, because the way that it was set up, I'm not sure if you guys remember the optimization or the genetic optimization settings, the way that they were set up. I had approximately 10,000 tests, but then I clicked on that suggest button and it switched something and it increased, from 10,000 all the way up to 58,000 tests. Now this came down from 1 hour 24 to 39 minutes. So it is gradually coming down, but I'm not sure I can sit here until this finishes. So let's go ahead and abort. No, let's go ahead and, I don't want to stop it because I don't want to set up all the optimization settings again. So if you guys hang on with me here, maybe we can get some results very quickly. Are there any questions so far? Now, it'd be interesting to know if anybody has used the WFO at all. Does anybody here use it? Because it is a tool that is built into the desktop. Not many people use it because not everyone is a strategy developer. But I do feel that if you have a methodology of trading that is based on certain rules, everybody should, create strategies around those rules and test them against historical data. Because if you do have a methodology right now to trade, you could very easily take that methodology and test it against historical data. Not only against historical data, but also do these types of tests that are going to give you a little bit more confidence about what your methodology will do going forward. So it's interesting to take a look at that. All right, so this is down to 5 minutes. So let's just let it finish, okay? Now, let me pull up the walk forward optimizer to show you something. Because I ran it earlier this morning and I have a result here. So let me load the result of this test that I did earlier. No, this is not the one that I ran. So file, load cluster analysis. I believe the one that I ran was this one right here. Okay, so this is the one that I ran earlier. This is the same strategy that we're running the test on. I'm not going to wait until it finishes, but this is what we did. I did run a cluster analysis and allowed it to finish everything here, all the table. So all the runs and all the different percentage variations, it did everything. And notice how it highlights a cluster of tests where the best results are. It highlights, right in the middle. And it's interesting that the middle, combination of runs and percentages failed. If I go here into the test results and I go to the different criteria, I can see that the one that it failed was the walk forward efficiency. When you look at the efficiency of the two parts, the in sample and the out of sample, the out of sample did not perform as well, or did not perform even to the standards that we were requesting. If I look at, the in sample, this is what the in sample net profit looks like right here in this column. These are all the different parameter variation. So all these numbers that you see here are the inputs, and we can see the difference between them because, I mean, the strategy as it optimizes is going to be switching parameters. But this is what we see, period. These are all the historical data periods that the data was broken into. And all of them have a positive net profit when you're looking at the in sample. This is the in sample section. If I switch over here to the out of sample, notice how the net profit, we have a few that are negative. We have some numbers that are really low, not as high as the ones we saw in the in sample, but you can see the difference right here. Just focus on this net profit and then go over here to the out of sample, and you can see the big difference or the big drop in net profit by looking at the out of sample. This is the reason why when it came to the criteria, it said, well, the walk forward efficiency is not as good, so this one failed. But what we're getting to, the fact that it's right in the middle is interesting because that one failed, but everything else around it passed. Not only passed the regular testing, but these two asterisks that you see on the right hand side just means that it actually passed with high scores. So we had a very, very good score in those passing grades. So it's interesting. I just find that interesting, and the fact that it selected that one as the suggested parameters is interesting as well. It just means that if there's variability in the parameters one way or the other, you're probably going to be in the sweet spot of the strategy. The strategy is probably going to pass. Right here in the in sample tab is where you have the parameters that are suggested. Right here it says recommended parameters for the next 295 days. So these are the parameters you should use for the strategy going forward. This is the last historical back test that it did. But here in the cluster analysis, you also have the optimization schedule. So now we ran the optimization. It's not until June 21st of 2024 that this strategy, based on the results, recommends that you should do another optimization to look at the newer data, optimize again, and select parameters one more time. Okay, that's my presentation for today. I wanted to provide you some information around optimization and the tools that TradeStation Desktop has on this topic. We not only have the simple optimization that you can do straight on a chart, but if you're really interested in optimizing strategies and finding robust strategies that you can have some confidence on, then the Walk Forward Optimizer is the tool for you to use. So guys, thank you for joining me today. Have a wonderful afternoon. And yes, the presentation has been recorded. If you need any files, please let us know at education@tradestation.com. And thank you again for joining me today. I hope to see you in a future class. Have a wonderful afternoon, everyone. Goodbye.